What's up, y'all? How y'all doing? Singleton, you good? I got your message. Can y'all hear me?
Yeah.
Jay?
Singleton, you doing okay?
Well, I'm outside because that's about all I can do is sit in the car. So.
Oh man, is your whole neighborhood?
It's my whole neighborhood. The main the lights at the intersections on my street are all off.
Is it from the storm like Hurricane Zeta?
Yeah, that's what happened. Mm-hmm.
Oh, okay. Wow. Be careful. I'm glad you're on with us, because I mean that's a good reason not to be on. But listen.
Yeah.
Definitely appreciate you coming on.
I'm gonna hang on as long as I can. I want to keep the power on my phone.
Okay, I understand. Yeah, you got to do that for sure.
Does she have a car charger?
Yeah, I'm on the car charger.
Okay. I was like, look, sis, you gotta be safe. This call's recorded.
Yeah, we want your safety more than anything. So, most definitely. Well, I think we had a great class the other day. Very power-packed and information-packed. Sister Washington was talking about the hard stuff, as I call it. And she's gonna come back again today and talk about the rest of that money, the accounting portion. Again, the part that get us all jammed up if we don't do what we're supposed to do. So, and then after she speaks about that, we're going to talk about starting your business with the end in mind. A lot of people don't talk about that. Hey, what's going on, man?
Good, man. Hey, let us talk to you late.
So we're going to start starting your business with the end in mind. Everybody don't think about that, especially when you're doing something you love. You're just thinking about just working and you're just doing your business or you're just skilled. But it's a process to it. And the end in mind has different meanings. It doesn't mean that you're selling it. It doesn't mean you're closing it. Maybe you're succession planning to your kids or to somebody else, things of that nature. So that conversation needs to happen. So it's good to know your destination before you get on the road. A lot of times you get on the road, if you don't know where you're going, anywhere to get you there. So it's good to talk about your destination before you get on the road. And if Hanif can make it on, I'm going to pick on him today. I let him know in advance because he is definitely a great example of what that looks like. He's already been able to do a lot in this small amount of time with his business, just coming up on 2 years in January. And he's shared with me some of the plans that he's had, and he's been able to hit those goals. And he's about to go into a succession planning space in the next few months. So I wanted him to definitely be able to let you guys know his journey and what he's been able to do. So you know that it's real time and somebody that you deal with actually has done it. So but Sister Washington is going to go. So she's going to be next. But before that, y'all know how we do. We want to know what y'all week was like, or in that last couple of days anyway. If anybody had any questions about what happened last class, people who wasn't here, if someone else is here that wasn't here, you had a question about what happened. We talked about the pricing strategy and your legal strategy. How you set up your business. So there's Rashid right there. So if anyone of you guys have any questions or something that you changed, something you figured out that you should do differently, maybe you figured out what your strategy should be, what your legal, how you should set up your business. Did anybody come up with that this week?
So this is Jana. I did, each class, although I haven't, I'm still measuring a little much, but each class I'm mentally fine tuning exactly where things are. So, I have Dailies, the brand, that does change management and services, and like kind of speaking to succession. And the goal is to develop the nonprofit to bring resources to the youth. So understanding that maybe my plan needs to be starting with the services I can provide rather than jumping to necessarily what I can provide for the youth. I can do things within my services to help build the network of resources for the youth later. So and I've also started doing like voice recordings because I'm not very good on writing things down all the time. So a lot of things stay in my head space. So I've started doing voice recordings, and my sister and I have set up like a situation. She's really good at organizing and writing all that stuff down, that I will like plan out my activities and record it, and she'll help me get it written down to kind of help organize myself. I feel like I'm still in the first week of class mentally, but I feel like I have a lot of access to where I'm going. So if I feel really good about where I'm at, and kind of cleaning house with what needs to happen before I dive too far in.
But one thing I would tell you, just make sure you're clear about what you don't want to do or where you don't want to go. That helps out tremendously. Because sometimes we don't know, but we always know we don't want.
Exactly. So I know.
We don't.
Yeah, and I realize, one of the things is driving, like you talking about succession, with me already being a parent and already, still in the middle of developing my adulting. It's like I have to think about the lifestyle I want to have in the next 5-6 years, so I can start structuring that now instead of just hustling and then you stuck with whatever you have. So I've definitely listened. I'm that's why it slowed me down. It just kind of let me know like I have a little thinking to do to organize myself the way I really want the end goal to be.
Love it. That is great. Thank you, Jana.
Hey, Jay, can I hop in there?
Sure.
This is Catherine. Jana, thank you for sharing that. That's really good. I would say I think I've slowed down a little bit too. It was feeling kind of bad because I'm like, man, I want to be on par with the course, like literally, no pun intended. But really taking that time to make sure, like, my initial thoughts, I can run with the wind and hit the finish line. But if I'm having to circle back to the beginning and rework everything, like it's much better to kind of pace and make sure that the steps we are completing are really setting us up for success. So thank you for sharing that. That blessed me. I appreciate it.
And that's great. And if you have the opportunity to do that, please do. Sometimes people don't have that opportunity, and that's okay too. But if you do have the opportunity to take your time. Make sure, because sometimes you don't even realize that you've hit marks. You're saying, I want to be here by December. And you come through December like it's you're running a lap. You didn't even slow down. You just ran the stop sign. And you got to do that. You got to slow down and look at where you came from, and then start, because that's what keeps you going forward. And you're not burnt out. You're like, wow, I'm not where I started. I have grown. And it's important to do that. So that's a perfect part of business. We don't like to look at our numbers. We don't like to look at where we came from. We don't like to look at our business plan. It's there for a reason. All these things are there for a reason, but if you're speeding, you're not going to do it. So if you got a chance to do that, please do it. Sometimes, you got to fight to get, maybe you just treading water. That's cool. The first thing you do if you're about to drown, if you make it to shore, you're not going to get up and run 10 laps. You're going to sit down someplace and breathe and get your thoughts together. So as soon as you can get to that point, sit down, breathe, get your thoughts together, and then start moving into the next space. But good job, you two. And like I said, Janie made me laugh at the adulting portion. Adulting is rough, man.
Millennial adulting is rough. But I feel I'm starting. It's really wild how, and this is a little off subject, but I remember when I was younger, I would feel like every generation before us kind of had this big milestone thing that they were responsible for, and I always felt like us as millennials, I was like, we're the first kids of Black privilege, kind of, and it's like, what are we going to do? I know now. I know what we're doing now.
Hey, it's a different world. It's a different world out here now. So who else has something going on this week? Or something, any questions about last class, their pricing strategy?
Well, I like to share. I guess I think it's a good thing. My husband and I, we've been doing like consulting work for different aspects of the faith community, basically the AME Church in different districts. And our pastor, who is pretty well connected across the connectional, he just did an email blast out with all of the products and things that we've done, and just told people that, they can do it, just give them a call and all our contact information. So, when you were saying slow down and think about it, sometimes things move and you don't even have any control over it.
Exactly.
So things are kind of moving, and I can appreciate what he's doing. He wants us to be compensated for all the work that we do, and we are compensated from time to time, but the level of work we give and what we get back or not, it's more of a ministry at this point. But yeah, he put us out there in email blast across the country, and just told people to get in touch with us for consulting parts. And so I think that's in a way is moving, even though I don't want it to move right now, but the time you have to take advantage of opportunities as they present themselves.
I love it. I love it. And the beautiful thing about it, I'm glad that he did that.
Right.
So it doesn't have to be any question, because anybody who knows about the faith-based community, you don't have to worry about if you're moving out of line or out of alignment. Mm-hmm. So he did it. So now you guys at your leisure, but you can go ahead and kick the door down, or at least push it open.
Yeah, let me get my business structure together so I can be ready for all this. But yeah, it's moving.
Well, sometimes the work that you do is to help you structure it, because now that it's going to go away from somewhat of a ministry to actual business. You'll start seeing what you really like, because that money portion starts to put things in its place. Because if you're working with this type of church and they don't never like to pay enough, or you overwork, you're like, I don't never want to do this no more. And then you start to go to this type of, I really like working with churches like this, and so I'm going to work with this. So sometimes just stepping out, then that kind of helps out that situation. So people are going to be calling because he put you out there. So the first couple of things might be your exploratory phase, and be able to say, you know what? All right, I did 3 of these. This is the one I like. Let's get more of these. And right. That's totally fine.
Okay. Thank you.
Love it, love it, love it, love it, love it, love it, love it. Singleton?
Yeah, so I got invited to the interview.
I can't really hear you.
Can you hear me at all? You can't hear me at all? Can you hear me?
Yep, perfect.
Okay. I got invited by another small business owner who does weekly Facebook Lives to on another interview. So it's another opportunity.
Out again.
Oh, I'll share another time. Sorry.
It's Never okay. Mind. It's okay. We know what you know you're going through some things. Put it in the chat. Yeah.
Okay.
So but now that was good. This is good stuff. I know you got Rashik, so I know you wasn't here. We talked about pricing strategy, and that's going to be a big deal for you with your going into this different, going away from just events and going to the corporate space. So have you been thinking about that? Have you been checking into pricing?
Yeah, it's crazy to say that. I just yesterday I just got my first product shoot.
First product shoot. That's what I'm talking about.
Yeah. So It's a guy, Italian. It's a company from overseas, but I guess he's in charge of what they do here on the East Coast side. We're gonna start off. We're gonna do about 20 pocketbooks. So we're gonna sit down and discuss numbers next Thursday.
Love it.
But yeah, super excited though, man.
Understand that, now you get into a space where, your pictures are way more important. That becomes your value proposition, because understand, when it needs your images to sell their product, your images just became that more important. They don't need your pictures at a wedding. That's an additive. They appreciate that 10 years later when they're trying to remember it, or somebody passes on, or they have children to show it to. That's not an instant gratification thing for them most of the time. But when you got to take those pictures of those handbags, and that's how they're going to sell it, that's what's most important. If your picture's going to go on the billboard, it's going to go on a magazine, that's what's most important. And so that's why the pricing structure changed, because the value of the service that you give is more vital to them, to the commerce they're trying to move.
Gotcha.
You know what I'm saying? So start thinking about that. So that your value proposition just changed for you in that space. So, and your value just went up. So, and enjoy that shoot. It's gonna be fun. A whole lot less headache.
Word.
It's gonna be a lot less headache for good money.
I'm definitely looking forward to it. Can't wait, man.
So yeah, so it's
first thing of all year, bro.
So we have Miss Kimberly Young. How you doing? She is a business partner with the Browns. You guys always see the Browns. They couldn't make it on tonight, so it's one of their business partners. So how you doing, Kimberly? If you can show your face one time and just say hi to everybody, if possible.
Hi, everyone. How are you doing this evening? I am not in the position to show my face right now. And I'm in the car riding, so if I drop out, I apologize. But it is nice to be able to drop in and listen in on this evening. I'm excited about what I'm going to learn this evening. So thank you for allowing me to come in. My business partners and I are excited about starting our new business and getting going. So this is great.
Thank you so much for coming on. And anybody else who has business partners, by all means, invite them on. They need to sometimes hear some of the things that you are talking about, or your spouse, more importantly. We don't want you to think that they got a side piece on Tuesdays and Thursdays. They can come in here too. So say hi to us. But no, please, man, please, sir, bring your partners in, or your spouses. We're virtual, so kids can come too. So we've seen Jamari a couple times. So if the kids got to poke their head in, we go ahead and say what's up to them. But Sister Angela, you have something?
No. Go ahead.
Okay. Emerald's going to go ahead and start talking about some accounting pieces to finish off what we were talking about the other day about coming out of your business structure. We should talk about your finances. And then, as I said, we're going to go into talking about starting your business with the end in mind. Again, this is extremely important. Some of us don't think about that. And we're going to talk about what that looks like, because the end is not just you, selling your business. It's like multiple different ways that you can transition. So it's going to be a good conversation, good discussion. It's going to be more so an open discussion tonight.
Can everyone hear me? Thumbs up. They say they can hear me in the room. Okay. I think that might be an echo. I guess I can do it from here, can't I?
Yeah.
All right. Let's get started.
Slideshow, please. It's right to your right.
Okay. So how comfortable is everyone with their finances when it comes to business, or understanding their finances when it comes to business? Anyone?
Jana says thumbs down.
Okay. Well, we're just gonna go over, kind of do a highlight. It's way too much information to get into the 20 or 30 minutes that I have. But I just wanted to highlight some major things that you need to be aware of when going to business, and things you might want to start looking at setting up. Even if you're not to the point where you're going to be generating revenue or anything right now, but you can also start looking into some of these things and understanding what you're looking at. If you have an accountant, that's great, because they can be the ones who can explain a lot of this to you. But the most important thing is that we, as business owners, have to understand our own financials, understand the financial statements, so that if we do have bookkeepers or accountants, CPAs, we can make sure that what they're doing is up to par, and make sure that they are reporting your revenue and expenses correctly, so the IRS doesn't come looking for us, and also they don't take advantage of you, which we see a lot of people who make tons of money. That happens to them all the time.
Ain't that right?
So today we're going to be doing some brief bookkeeping tips, talk about profitability, financial statements, and touch very lightly on some taxes.
Tax time coming up.
It is. Okay, so basic bookkeeping. So maintaining thorough records can help you do multiple things. Some of the biggest things for me is making better decisions. When you understand what your financial situation is, you can make better business decisions. Also, it keeps you on budget, within your budget, making sure that if you set a goal and you know how much money you have to work with, that you will be staying within that that goal in your budget, so that you don't overspend, or if you need to make major purchases and things like that, you know how much money you do actually have. Also, something that you might want to consider doing is investing in a business accounting software. QuickBooks is one of the biggest ones on the market, but there are some other ones that are a little easier to use. Wage is one that, and then you also, they're not accounting softwares, but they do allow you to keep track of your money with connecting funds. PayPal, Square are two of the larger ones that are on the market, as far as merchant services, things like that. They've also, those two have added the functionality of invoicing, doing estimates or quotes. They've also added, Square has added payroll to it. So there are a lot of merchant services that we use on a regular basis, to collect payments. But they also are now offering multiple services, so you don't have to go all over the place to collect and keep record of your money. So that is from an income perspective, and then so that's really, really helpful. Also, good bookkeeping will help you record all your data, do reports regularly. If you have business partners, or if you're trying to go to a financial institution to get funding, that's going to be very important. And then another bookkeeping tip is, now that you all are in this class and you are establishing your business the correct way, as soon as possible, as we set up our legal structures and we go get those business bank accounts, keep your business and your personal finances separate. Separate bank accounts, separate credit cards, all those things need to be separated as soon as possible. Even if you are a sole proprietor, as we talked about last week, I suggest that you keep a separate set of books and separate bank accounts, just so you can make sure that your business is paying for itself and you are not paying for your business. Also, when it comes to finances and paying, you personally paying for your business is not so much of a problem, but your business paying for your personal finances and expenses is the larger issue. So your accountant or bookkeeper can help you with that. And then if you are not interested in doing that, you have to be disciplined enough to be able to do that yourself. And if you don't want to do any of this stuff, hire an accountant. You don't want to worry about it, but this is still what this course is about, is to understand what they're going to be providing for you. Allow them to set up your business. We talked about the business structures last class. Let them do that for you. Let them set up the initial accounting system for you so they can put everything in the right place, and maybe you can just do the upkeep by doing the inputting. Allow them to help you create a budget. Do your monthly or quarterly or annual reporting, file your taxes. Those types of things will just take a lot of headache away from you. If you are not financially savvy, or maybe just don't have the time. We're a big component of paying people who are good at what they do. And so accountant, a bookkeeper, a CPA, anybody who has any of those titles would be good to help you get started and also keep you maintained.
Maybe can I ask you a question?
Yes, sir.
Just a war story of a client that I had. She allowed her accountant, she had an accountant on board where she hired a person, and she trusted that accountant to do all the work, file all the paperwork and everything. And apparently she was not doing her trust but verified field, and the accountant wasn't following doing the proper paperwork as you teach us now. So what would suggest to us as entrepreneurs, what are we supposed to be doing when we do farm our information out to other people to do our books, and how much involvement should we maintain?
I think that from the beginning until a great until the relationship is, you have some track record. Ask questions. That's the biggest thing. Ask questions. You know how much money you're making as a small business owner. Make sure that that is being calculated properly. You kind of know as a small business, is to a certain extent how much is going out. Everyone in this class pretty much has a business that they can be hands-on. But if you do outsource it, ask questions when they're running the reports. Well, why is this going there? Why is it? Don't allow, and this is my personal opinion, don't allow your accountant or bookkeeper to set up accounts in your name for you. Do all that yourself. Yeah,
that's what I want to hear. You gotta stay engaged.
Also, that part where you separate both your business and personal, this is where that becomes important. Because when it's personal and you just took your boo thing out, or you just got this and you're doing all this other stuff, and you don't really want to look at the numbers because you went crazy last week, and so you got that other person there. You want somebody, a lot of times secretly people want somebody to tell them bad baby. And no, when you have it separate, understand, I don't care if it's $5,000 and it's down to $500. If it's not your household, it's okay. It would be easier for you to look at it and talk to somebody else about it. Have weekly meetings, have bi-weekly meetings with the people that you work with. I call it going to the lab. And going to the lab is for your lawyer, your accountant, and your banker. Always talk to either one of them on a regular basis. I'm just on Facebook just now, back and forth in the inbox with my banker. We're friends now. They are at my book signings, stuff like that. I'm married to my accountant, but we still have another person that we do accounting out of state to help out because, maybe we won't like each other one week. And so we got to make sure everything is all right. And then you got to have an attorney, because I know in the state of South Carolina, certain portions of the legal procedure that you got to get your legal strategy, you got to have an attorney to help out with. Going to the Secretary of State's office. So get you an attorney. It doesn't cost much. It costs way less than it would somebody suing you. So pay the $200 and something retainer, $300 retainer. You might have to pay something more later, but just to retain them to answer your phone calls. do that. Jana, you had a question?
Yeah, so I have two questions. I've signed up for I'm a part of Legal Shield. I don't know if you guys are familiar with that. Is that, I've signed up for that because I wasn't knowledgeable enough or in the position to need a lawyer to go shopping for one per se. And so I signed up for Legal Shield figuring if I did have a legal matter, at least it would allow me to get to know some different lawyers and at least have a network of them. Is that sufficient, or would you still recommend having my own
I
personal?
think that's a great start. They serve a purpose, especially in the beginning. So I think that's a great start. They can still help you with paperwork that you don't understand, and things like that. Certain things they probably won't be able to go out and do, like a personal lawyer, as well as that personal touch. They probably got a bunch of people that they got to go ahead and talk to and deal with. And at the while, as your business grows, you're going to definitely want to go ahead and retain somebody else. But that's a great place to start, though.
Okay. My second question, Emerald, are you hireable for your accounting services?
Yes.
You better know it.
I know. It was a rhetorical almost, but yeah.
Yes. Okay, the last little bit about setting up an accounting system. Basically some of the same things your accountants will do, but this just helps you keep record of your day-to-day transactions, journal entries, general ledger, trial balance, all those reports. Track your cash or accrual method, and that your accountant will help you set that up. And then, like I said, the bookkeeping or the accounting system will help you do a multitude of things. And it's not really that hard to understand. It's just when it gets down to the real deep reporting and actually having to explain it. That is probably where you might be able to get caught up. But hopefully after today, you'll get a little bit more familiar with what you may be looking at. So profitability, our net profit or net income, you'll hear it and used interchangeably, is basically your bottom line. Is your revenue, what your income is, minus your expenses, equals your net income. And everyone wants to know what their bottom line is. So when you are doing your business, and we've talked about multiple ways to get revenue, and then also now we're going to talk about some of the expenses that go within, and we talked about that as well. Your net income is what you bring home or what your business retains. So from that net income, a lot of things can happen with it. But this is it. This is why we do all of this for our net income. So we need to make sure that our revenue is calculated correctly, and our expenses are always up to par, so we can have an accurate outlook of what our net income is. And then we should be looking at this pretty much monthly. And so that's what our accounting systems will help us do. And then also our merchant services will allow us to see our revenue. If we use one, our revenue will be coming through there, and they'll allow you to see exactly what you are bringing in and where is it coming from. And then our expenses pretty much will be calculated on our bank statements, because that's where we're using our cards, writing checks and everything like that from. All right, so our financial statements. There are three main ones: balance sheets, income statement, and cash flow statements. So this is a little breakdown of what those different financial statements will be reporting. Our sales, Kimberly said she made it home, so she's gonna log back in.
Okay, great.
So our sales is, like what we're bringing in, how much you're spending is your expenses. What your business is making, that's your net income, is your sales, so your revenue minus your expenses. Your assets, what is the value of what your business owns? These are buildings, vehicles, cash, anything tangible that you own as a business. Those are your assets. Now, what your business owes other people are your liabilities. And then what your business is worth is your equity. And so your financial statements are going to break down these different financial statements are going to show all these different things in different ways. But these are all super valuable in understanding what you're looking at. So your balance sheet, you're always hear banks mainly ask for what your balance sheet. This is tracks your assets and your liabilities and plus your equity. So your assets minus your assets equal your liabilities plus your equity. So your cash flow, inventory, accounts receivable, those are all assets. Fixed assets are property, vehicles, and machinery. Liabilities are your current liabilities, the things that you're paying on or you owe that you're going to be paying off within a year. Long-term liabilities, a lot of times are like cars, property, and things like that. But one thing that I do want you all to know that you can have assets and liabilities, the same ones. Just say you have a piece of land. That is considered an asset. However, you may still be paying on it. So the value of the land may be $50,000, but you owe $25,000 on it because you're paying on it. That asset is going to be worth that $25,000. The difference between the two. Yeah.
Also, if it's not making you any money. So if you're just paying for money going out and nothing's coming in, so if you got that, I don't care if you own it, if it's a house or a piece of land or whatever, if it's not making you no money and it's not gaining any equity, then it's a liability until it starts to bring something in. So that's something that everybody needs to know.
Right. And then when you combine all these things, these are your equity, what is kind of like almost like your net income, but from an asset and liability perspective. So that's what a balance sheet looks like. And I'll show you an example on this. This is what it will look like. I don't know if it's big or small on your screen.
Pardon me, Emerald.
Yes.
I do have a question. Back to the last example you used for how assets and liability, something can be an asset and a liability. So in the case of the land, your balance sheet will reflect a 25K asset and a 25K liability in that example?
Yes.
Okay.
It would. And then as you pay down the loan on the land, it's kind of tricky because your land can be worth a whole lot more than or your house can be worth a whole lot more than what you owe on it. So but it's all about the value of it. So I can't say that it's going to be cut and dry like that all the time.
That's what I was talking about if it's not acquiring any equity.
She's using it for a purpose of
paying. Yeah, and if it's not bringing any money, right, then it's just a liability. So again, even like the house you live in, everybody, this is an asset. Mm-hmm. Not if you bought it at $300,000 and it's not worth more than $300,000 and all you're doing is paying on it because you're owed more than $300,000. And so long as you're paying it, it's a liability until you knock it down.
Right. But what if she's using that, say she got the land and she's still on the debt on it, but she's also using it to gain revenue? No, revenue makes it into an asset. Right. Yeah. So, okay. And then that's where that's where the balance comes in. You're starting to see a lot of entrepreneurs move out of their house, let somebody rent their house so they can actually make money off of it and go rent something somewhere else because the house is killing them paying for it. But now you turn into something that's making money for you, and they'll rent from somebody else, not have to worry about fixing the house that they stay in, and then use other spaces to make money off of because they're learning that what's really an asset and what's really a liability. And then what's the other question about that balance sheet? Why is it called that balance sheet? A lot of people keep talking when they came in the office and we asked for these instruments. And the first thing that we asked for, the
income statement,
the balance sheet, those three things: cash flow statement, balance sheet, income statement, and they stopped. What are you talking about? That was a tell-time story for us that.
Yeah, and it wasn't.
Right. And this is the position that we don't want you all to. You're going somewhere and looking for financing, and they're asking you for these particular documents, and you're like, I have no idea what you're talking about. So then they know that you are not involved in your finances.
Yeah, it's one of those things. A lot of people
do all your work.
ask for their income statement and then they start looking for tax returns. And they're like, no, that's not what that is.
So exactly, and then we're gonna go to income statement next. So here you kind of see it, this is what it probably will look more like outside of the one that we just showed you. But and then it carries from year to year, so you can project what your income and your assets and liabilities are, and then you can also see what actuals are. So it can get kind of lengthy, but it's a great overview of what your business looks like from a high-end view. So now we're going to get into what some of these categories, because these are like the overall categories, but then we're going to get into what what goes up under the assets and the liabilities. So your income statement shows your net income or loss that the business has experienced over a period of time, typically monthly, and then accumulated into the year. And it tracks financial results from your business model. So a lot of these, here we are, got your income, which is your sales and other income, your expenses, and break down to multiple different things that have to do with your business. And then those go, your income turns into your assets, which, checking, your accounts receivables, undeposited funds and equipment, which is, like we were talking about other assets. Your expenses go into your liabilities, and some of your expenses may be loans, sales taxes, also accounts payable are liabilities. People who owe you, well, the people you have to pay, which are all under your expenses. Those are liabilities as well, and you might find that your accountant or bookkeeper might put those figures into your liabilities, so showing a true financial overview of what your financial state is. And then your equity, contributed capital, which is your owner invested funds, and retained earnings, which is basically the profits, your net profit. All that is considered equity. So any equity, you might be looking at maybe investments that you have made into your business, and that's kept on the balance sheet. And then also, like I said, at the end of the income statement, your net profits are put on there too. So to show that you are making or losing money, it depends on the financial state.
Whatever you do, keep looking at your money though, please.
Yes.
That's the easiest way to get lost, is just close your eyes and then wake up 2 months and it's like, oh, it's all gone. Please look at your money, pay attention. These banks, sometimes you start swiping the cards and the stuff that you swiped 3 days ago don't come out till next week, and you think it was gone. It's just the simple things, and I've done it, trust me.
Also, the income statement is, the name is interchangeable. You might hear people call it a P&L, which is the profit and loss statement. So if you hear P&L, that's basically the same. It is the same thing as the income statement. Also, this is like a overview, and this is all in your module as well. There's a few lessons down, but we're covering a little bit earlier because we are kind of stacked up with speakers that's going to be coming and taking some of the time that we're going to go over this. So we're kind of like going a little bit ahead. But this is in the next module, commit module. Commitment. Yeah, commitment module. So this example here and the one from the balance sheet is also in there as well. The other ones, the nice big ones, those are from another source. But these are all the expenses broken down year by year, but your income statement should be looking at month per month and what you're spending on almost everything. You have to calculate, you have to account for everything, because you won't have a good financial picture of your business if you don't. All right, cash flow, which is, you hear this a lot. What is your cash flow like? The cash flow is basically how the money is flowing in and out of your business on a monthly basis. And if you don't have a good cash flow, you're going to find yourself in a lot of financial problems. The reason why is because if enough money's not coming in, it's not going to be coming in enough time to pay the bills that you have to pay, which is your expenses. And so, then you'll become behind. So when the revenue does come in, you're kind of play catch up. So having and establishing a good cash flow is extremely important. Your bookkeeper and accounting, once again, if you're talking to them on a regular basis, they will help you kind of see what your cash flow looks like. They're going to ask you questions about when are you having, what jobs have you done? When are you expecting to get paid? Okay, well, if you're going to get paid, let's talk to these vendors to make sure that your expenses are, you can pay your bills on time and not get behind. Also, if you have fixed expenses, which is called overhead, what you run your business with, these are things that don't change. If you're renting a space to run your business out of, if you have employees that you have to pay, utilities, if you run using a vehicle for your business, those are all fixed costs, so overhead that you're going to need to make sure that you have good cash flow to cover, because those expenses are going to happen whether you sell something or not. You're going to have to pay those monthly anyway. So cash flow is extremely, extremely important. And then this is, one of the reasons why we are, this is what we talk about every week, how to maintain and to create good cash flow so that you're able to run the cycle of your business properly.
So what I've been telling people lately, because I've learned this in my time in business now, is that what happens in business, you start trying to find a way to create an income flow like on your job. This is why people get married to their job, because they know the money's coming every week, every other week. And if you can create your business that way, you're in good shape. Set up where you have a certain amount of money coming and you can count on it, because that's when the banks will start giving money to you. That's when people wouldn't have a problem with investing, because they know they can count on it. It's very, very hard running the business when you don't know what's going to be coming month to month. And in the beginning, that's just what it is. That's par for the course. But at the same time, keep in your mind, this is where we start to look for clients, because we want people to have relationships, long-term relationships, year, 2 years, 3-year relationships. This is where you start to be able to build, equity and actually get a net worth to your company. When you have 3 and 4 different contracts for 3 and 4 years at a time, now you can say my company is worth this, along with the other assets that you have. Because someone trying to, which we're going to get into this later, someone trying to purchase your business is want to see what the runway looks like. Okay, you asked me for $300,000 for the company, but they're going to probably want to see that over a year or two, I can make another 600 or 500, and then still have. Then I have enough assets like equipment and tools and manpower that I can take this 3 that I pay and go into Singleton. You can't hear? Everybody else can hear? Okay, I don't know. See, everybody else said they can hear. Yeah, so everybody they're going to want to see if you can make, they can take all the stuff that you have and make it into $1 million with the assets you have, with the money that you got coming in for the new contracts, which is the accounts receivable, which is still assets. And with that, you can take that and say, hey, we can show this to the next person and make it into $1 million or $2 million. So this is where we start building an actual business, not just our side hustle or something that is just about us. This is why we talk about starting your business with the end in mind. What is the succession plan? You can't think about you doing it yourself for the next 15 years. Singleton, you good now? Okay, great.
Okay, so with your cash flow, this is also something, oops.
Well,
Sorry, guys.
she wants to be next to me so bad.
Your cash flow is something that It's broken down by month. You kind of look. Usually, you're looking at it from a annual perspective because you want to also project. You want to project what you're going to be making, like we said in the beginning, so you can establish a budget. Establishing a budget allow you to stay within the different, basically the finances that you set for yourself. If you don't make it, then you also know that as well. So this is, kind of like a all year cash flow statement that, you have your projected revenue, and then you're on your P&L, you'll take the same number for that month until what your actual revenue is and your actual expenses, and then at the bottom, you come out with your total cash that you spent minus what you brought in, then your cash flow is calculated from there. These statements that you're seeing here are extremely important, especially when you are trying to get financing, and a lot of them. What I found this year is that we have there were a lot of businesses people were doing business, but weren't keeping up financial records, and they weren't eligible for a lot of the government money they were giving out for the bailout, for the a lot of the the PPP money, and the EDIL, all those types of things, because these things needed to be in place. They wanted to see what your income statement was. They wanted to see what your balance sheet was. They wanted to see your cash flow so that they can determine, if you're able to pay it back.
The invoices, they want to see if you actually missed work, if you actually missed payments.
Yeah, so these are extremely important to have and try to establish. It may not look the greatest in the beginning, but that's okay. The most important thing is that you are keeping record, and that at the end of the year you are able to have a full picture of what you brought in and what you put out. In the beginning, there's a lot of times, and I'll go over like some things you're going to need for taxes, since that's coming up pretty soon. In the beginning, you're going to it's more than likely that you may show a loss. 9 times out of 10, the micro businesses, which is what we're dealing with here, the really small businesses, are going to spend more than what they actually brought in. And that's okay, because you're going to show over the next few years how that changes when you're reporting that income to the IRS. And that's really what they want to see. They want to see that you are actually building business. And if you are continuously losing every year, and you are as personally putting more money into the business than is actually making, then you might need to take FastTrac again so we can figure out what the problem is. So very quickly, I want to share with you.
Here's a comment. In the past, we used to do what we call shoeboxing. That's what accounting, you all hate that. End of the year, we bring you here's shoebox.
I still have clients who do that.
But those software, those applications you talked about earlier, QuickBooks and Wave and Square, those are lifesavers.
Mm-hmm.
And if you're not using them, you need to go ahead and just grab one and just put stuff in there, because it's not gonna lie to you. In fact, it's gonna reveal some things that you're not doing if you use them properly.
Yeah, great input, Angelo. So utilize the merchant services, PayPal, Square. There's another one out there that a lot of people like to use. It helps with billing people and things like that.
Well, good old fashioned banking. They have the merchant services thing.
Yeah.
What are you talking about, Stripe?
Stripe. Yeah, that's another one. But that's for e-commerce. But those the 2 biggest ones is the Square and the PayPal. They offer the card readers. They do invoice. You can send invoices. Now they've both added where they can automatically, if you have reoccurring invoices, they automatically charge people monthly if you set it up that way, or send the invoices out monthly so you don't forget. I use that for the pod. The parents come in and they get a weekly invoice that they pay. I don't have to remember to send it to them. They don't have to forget to pay. So it works for my cash flow. So, you know, if you have any more questions about that, we could definitely answer them here. But then I just want to run through this real fast. This is something that I give to small businesses when they come in the door for our tax prep services, mostly for small business. Things that you need to, I'm bringing this up now because tax season is actually right around the corner. So just giving you an outlook, if you already have done business this year, this is some things that you might want to start getting ready for whoever your tax preparer is. Your personal records and the information about your spouse and children and things like that. Your income tax statements from the last couple of years. And your current financial statements, bookkeeping records, everything that we just talked about, that will make the accountant or tax preparer's job so much easier instead of, like Angelo said, being shoe boxes or, you know, just envelopes full of receipts.
I think y'all talking about me.
No, not anymore. You know, you don't have to.
I used to have bags. I used to have bags.
So all that information is exactly on those financial statements is exactly what the IRS is going to be asking for. When your Schedule C is, it looks pretty much like your income statement. It's going to have your revenue and then different expenses that are tax deductible. And I'll show you some of those soon. Your income records, so your 1099s, which your business has gotten paid. Your W-2s is what you getting paid from a 9 to 5. If you've already done your business taxes, estimated taxes, some of the things that you've already paid, your general ledger. You know what? I think it's Keisha, can you go on mute, please? I'm trying to do it, but I actually screens up. Okay, so your itemized business records, your general business expenses, you know, keep documentation of some of these things, meals and entertainment, travel, advertising, legal and accounting fees, business insurance, business tax, your taxes, your business license, permit fees. These are all expenses that you need to keep up with throughout the year that you spend for your business. Office supplies, internet and cell phone, banking fees, business loan interest, equipment storage, and office rents. These are all general business expenses that your business, the IRS will take into account when you are running your business.
Those business loan interest and bank fees. Remember those, okay? Because you might have some banking fees. A lot of us have them for different reasons. File them on your tax return.
Exactly. Does anyone have any questions regarding these general business expenses?
You know it's a lot. I think you're gonna provide this to everybody.
Yeah.
Yes.
I have a lot of questions, but I think I'll probably get them answered in my consultation.
Can you speak to about archives and how long you need to hold on to these documents for audit purposes?
I mean, your tax is 7 years.
Okay.
7 years, you should hold on to this information, not the actual receipts, because if you're putting this into financial records, is a whole lot, you know, no one has the space to keep 7 years worth of receipts and stuff like that. The larger items that you might purchase, you want to go ahead and put those in a safe place, but keeping the records, like the income statements and all those types of things, it's a lot easier now too, Angelo, because it's electronic.
Right.
So all this electronic, so you just keep it, and you know, but you have to keep record that you're doing these things, and then if you're asking somebody to sort through all this stuff for them, please make it easier for them. Just put in an Excel spreadsheet at least. And that way, you know, they can kind of sort through. All of our startup people who are starting up their businesses, a lot of your startup costs are some of the things that are in this list. And those are also things that you can put onto your tax return to ensure that you are, they are accounting for that. They're deducted up to a certain amount. And then if you're over, I think it's maybe 15,000 or something like that per year, they'll go and ride that, they'll take the rest of it into the next year. So I'm gonna stop right there so we can get into the next part, and we can go into this a little bit more and Q&A at the end, and then also if you want to set up a consultation of just understanding exactly what you need to do, getting into the going into the tax season, and also setting up your bookkeeping for the next year. I think that'd be a good tool to use. So I'm done.
Great, go ahead. Thanks.
Great. Thank you, Sister Washington.
Give your hand up.
Let me tell you something. I hated accounting class in college. Still hate it. And the thing is, getting a degree is around the same time as your wife, and she's a straight A student. You get the professors telling you you're not a good student like your girlfriend.
You gotta love Boothville, right?
Oh no, that wasn't her. It was all the the men. It was more the men.
Oh.
Was saying that. She just already knew what time it was. She helped me out, but all of the men were. I would go to the class. Why are you not a good student like your girlfriend?
Like, who does that?
Leave me alone, man. So, but no, this is good stuff, and I'm blessed to happen to be married to an accountant. But I was the one with the bag. She would, where's your receipts? And they'll be in like the bags you get from the grocery store. I had bags and receipts, and I was like, here you go. And I should have some choice words for me. But I kept my receipt. I still keep receipt. I keep receipt for everything. So it don't matter what it is. But at the same time, I'm glad I got somebody to say, here, funnel that out. She got multiple computers, and okay, that's my accounting computer, leave it alone. And so she's doing that type of thing. So I'm happy about that. But all this helps with what we're about to talk about, starting your business with the end in mind. I got Hanifa on the line, and I wanted you to speak briefly, just a couple minutes, man, because you just jumped out into business full time almost 2 years ago, and pretty much everything you said you wanted to do. I mean, sometimes some of the time frames might have pushed back a month a little bit, or something like that. But pretty much everything you said you was going to do, you're doing it. And one of the main things I wanted to focus on your succession planning, because you said that you wanted to get out of the truck, and you're like 2 steps away from getting out of the truck, and you've only been in business full time for a little less than 2 years. So would you want to speak on that a little bit?
Absolutely. Can you hear me good?
Yep.
Yeah, man. Well, first of all, Jay, as always, I appreciate the opportunity, man. Like Jay said, about going on 2 years ago, I just said to myself, you know what, I want to go ahead and, have my own trucking business, and I don't want to be behind the wheel for, because I know what that can do to your body, and more important, out of the truck. And one of the famous sayings, I know he's going to go over it, is you want to work on your business and not in your business. You want to adopt that mindset. And so, started with one truck, where I really wanted to understand and learn, what is it going to take, for my drivers when I hire them. What is it like driving across the country? What is it like driving in inclement weather? What is it like dealing with the shippers and the receivers and everything like that? What is it, just what is it from the perspective of a driver, so I could understand that and talk that talk with him or her as my employee. And so we started with one, and, linked up with a good partner of mine, and we both had the same ideology, just in terms of, hey, let's team up and let's make it work. And so one truck became 2 trucks, and 2 trucks just multiplied with that. And, my partner, he was the first one to come out of the truck, because we understood that both of us can't come out of the truck, because that wouldn't be good for the business. And so one of us, we both had to come up with a decision. Okay, well, you come out, and then I'll still hold it down behind the wheel. And like Jay said, about a couple of steps away from me coming out of the truck. It wasn't an easy process, but I appreciated the journey because now it gives me and my partner the knowledge and the understanding to grow. You know, when we grow in our business, we could talk not only from the administrative side, but we could also talk from the trucker side and the employee side, and it gives us great insight. So thank you for the opportunity to share, man.
No problem, man. One question for you. So what has that done, like in your planning phase, what did you see saying, hey, you know, when I get out of the truck, what's going to free you up to do now when it comes to growing your business?
Say that question one more time. He's breaking up.
What is it going to free? How is it going to free you up? What is it going to be? How is it going to help you grow your business? You getting out of the truck, you and your partner getting out of the truck.
Oh man, great question, Jay. Great question. Well, what is it going to do? Is it's going to allow me to now really look at JW Supreme, the business, from the whole picture, and not trying to be the driver. Still take the phone calls, still manage the drivers. That's a lot. So now with me being from behind the wheel, I can now sit in the office. I can now game plan. How can we grow? What are some areas that we are weak on? How can we, make that stronger? It'll allow me now to be in the field, to gain more contracts, to meet new people, to really shake hands and kiss babies that I wouldn't be able to do if I'm behind the wheel right now. Because behind the wheel, you got to make your deliveries and you got to do a whole lot of multitasking behind the wheel. Ultimately, behind the wheel that's gonna win at the end of the day. So being in the office will allow me to be creative and allow ultimately the business to grow.
Love it, love it. And like he said, if you didn't hear, I always say this to him. We talk about working on your business and not in your business. And that's very, very important. Sometimes it's not you. Sometimes you have to bring other people in to work on your business while you're working in your business. You know, he just chose to invert it a little bit. He's going to get out. Let these people go ahead and work in the business while he's going to step out and work on his business. So congratulations to you, Hanif, everybody. Give him a round of applause, the hands. That's a big deal to do in a couple years, but he's focused, and it's a good thing to see. So we definitely wanted to let people know about that. So why plan for the end at the beginning?
Thank you, Jay.
Again, y'all want to get me. Why I feel though it's important. I read a book years ago. It said how to value your business to sell. And what that means is, every business needs to start to gain equity. It's all good me being a photographer, taking pictures, but I realized that if something happened to me, the business isn't worth anything. So this is where I had to start spreading out and saying, what can I do I can say, okay, how can I succession plan? Either give it to my kids, well, my kids might not want to take pictures, So what can I do that I can give them a job? They're going to need it. My daughter will be a teenager before long. Any of these types of things that we can do to help out. So that's why the end doesn't mean when the business is completely over. The end could just mean the end of this particular part of the business. And, because the business starts to look like something different when Hanif is no longer the driver. And what do I mean by that? Because people get used to you. If he's the delivery guy coming to a string of hotels for 2 years, everybody's used to him. And whatever service he brings, that next driver is not going to bring that service. And so no matter how much he coach him, no matter how much he coach her, she can't be him. She's probably not going to drive as fast as he do. She's not going to do the things that he do. He's not going to do the things he do. And he's going to have to be okay with that. And this driver is going to maybe drive faster, maybe even be better, maybe not as good. But the business is going to change. And that's what the end looks like in business. It's not always the end of the company per se. And we'll get into what the end looks like in certain transitions. But anybody, like I said, I wanted to talk about that. So what is that? Why is it important? I get two people. Why is it important to you to think about the end in the beginning?
Who's that question for? Anybody?
Anybody.
Oh, well, I'll be honest, man. For me, as much as like doing photography for me is not actual work in a sense, because it's more love than work. At the end of the day, nothing lasts forever, and the ultimate plan is not to have to be away, like completely, like working your life away for the most part. At some point, you want to sit back and enjoy the fruit of the labor that you put in, and and just watch the rest of your life blossom in a sense. Watch your kids grow, possibly, if the role holds grandkids and so forth, or more or less like me. Part of my plan is to do what I do to make it successful. And even if it doesn't lead into me turning the business over to my kids, more or less it's a foundation for them to stand on in whatever role they decide to take. And hopefully, like looking at me with the grind and the sweat becomes an inspiration to them to do better, and bigger things in their lives for themselves and for their kids. So that's what it is for me.
Good. Somebody else?
Yeah, this is Robert here. I can't say that I initially started out with this mindset, but as we've been going through the class and listening to things, I think that it's important to have the end in mind, because it gives you something to strive for that you're working towards. And I also think that it's also important because you're gonna have you might have some challenging times. You may have some challenging times, but if you have that end in mind, you say, okay, look, I'm having a challenging time now, but I'm gonna keep going forward because I know what I'm striving towards. So
yeah, I love that. And as I said in the beginning, if you don't have a destination, anywhere any place would get you there. So you gotta actually know where you're going. And so we want to know, like, how do I know I'm successful? Is it making 100,000 a year? Is it making 500,000 a year? Is it making the top 500? What's success to you? If you're just out working every day, you just get up every day and you're doing nothing, because that's what's happening. Because look, the mouse on the hamster wheel is working hard, but it's not going anywhere. So we have to. That's what's important about that. So the next is protecting the value of your business, of the business you built. This is important through all the years, because people are watching. It's just as important as you, because after a while, everybody knows. If you're the guy with the restaurant or the woman with the hair salon in the community, that's what they're going to say. They're going to say, so-and-so from this place, so-and-so from the restaurant. That's who it starts to become an identity. And the value of that has to carry through the life of the business, at least until you make a transition, but definitely through the life of the business. So it's very, very important. Then we talk about creating a smooth transition for your management team or your family members. Again, this is what we talked about with Hanif. He said he had to get out and drive, learn the system, learn the ropes, not just how to drive a truck. Somebody else taught him how to drive a truck, but it's the business component to that. And a lot of us get stuck in our skill set. We're gifted at driving, we're gifted at shooting, we're gifted at doing whatever else we're doing, talking to people, selling something or another. But the business side hurts. And we have to be able to do both sides. Because once that part is over, you got to do the accounting. You got to mend fences, relationships. You got to make sure that the people that your employees are happy. And then your family life, you're going away from home 16 hours every day. It was okay when you was gone for 8, but now you're in business by yourself for 16. All of this stuff, you're trying to create that smooth transition. You have to, you have to work that out. You have to keep that in mind.
But the transition don't start at the end. The
No.
transition starts years before you get there. So there's a plan before the plan, if you will, for you to say, hey, now I'm ready to transition. It's not a abrupt or, hey, guys, I'm going, here's the keys to the building, I'm out of here. So that's not what this is saying. So it's really a strategic thought process.
Definitely.
Even within your business plan, the business plan going to have to sort of speak to that exit strategy, if you will. How are you going to fit to get out? Who's going to take over? At what point? 3 years, 4 years before, that, et cetera.
I love that, Joanna. And also, how many of you guys, you can just put it in the chat if you want, feel that it's important, just as important to tell your spouse or your family as it is important to tell the management team about your plans for exit? Or,
those were the legal stuff coming out, Jay, too.
Yeah.
Because if say your partner, I think Hanif and his partner,
Mm-hmm.
if they don't have a written legal operational agreement,
Mm-hmm.
and say something happened to Hanif, and this hypothetical,
Yeah.
and his wife is like, okay, well, he's gone, but now
I'm ready to get rid of the business.
in this business, I want to do something. If he doesn't have anything there written from a legal standpoint for what happens after he goes, then she gets nothing. So that's that thought process.
You gotta let everybody know what's on your mind, and that helps great employees and great employee morale as well. Because if somebody might be saying, you can tell them, hey, I want you to come on, and you're putting in all this work, and they don't know when their next raise is coming. They don't know when their next promotion is coming. You're not telling them that I want you to be project manager in the next 2 years. What am I working for? Why am I putting all this work in for you? And with your vision. Generating potential income for retirement or disability. This is important to talk about your profitability and everything like that. So we have to retire too. Entrepreneurs have to retire, even if it's just retiring from this particular business. So you want to put yourself in a situation where you're acquiring assets, where you have revenue, sometimes revenue that's going to go past when you leave the business. My mentor, when he sold his company, he ended up getting it back, but he sold his company. He was still able to have a 49% stake in the company, and still got over $1 million. So he was able to make that investment, do some other things, but still got a check all the time every quarter. So that's great planning. Yeah. So he just created an income. He didn't just do that business for those 8 to 10 years he was in the business at the time. And and then disability. One thing I am a big proponent of for entrepreneurs: get your disability. It doesn't cost a lot. Go to I have mine with State Farm. I pay $50 a month, but I know that if something happens to me, if something happened to my leg, Emerald not gonna kick me out, because after a month or two come in, she'll start getting a check every other week. So I won't get put out and sitting out there with the dog, and that's important. I don't know, because people come to entrepreneurs and talk about the life insurance, and the wife will get over it because she can't do nothing to you when you're gone. But if you're just sitting on the couch for 3 years and no money coming in, she might look at you a little different. So, about your lack of planning. So you have to think about that. So enhancing the future worth of your business. This is paramount. You have to be thinking about how to continue to grow your business. One thing is, we don't like this because it's a big expense, but employees. See, when you get to heavy in business, they're playing Walmart playing a different game. They're not worried about how much money they make. They're worried about how much money they keep. So when they're worried about getting rid of employees, that's for them to keep money. Employees are your biggest expense. Walmart paying people the cheapest amount. Why? Because they can get maximum value. They're trying to keep money. In the beginning, you worry about how much you make. When you get to that level, you worry about how much you keep. But you got to get employees. They're transferable too. If somebody bought Walmart tomorrow, all thousands of people that's with Walmart go with them. And so that's how you grow an entity. Again, Hanif went from 1 truck to 4 trucks in less than 2 years. That's growth. Each one of them trucks, these are 18-wheeler trucks. That means his company is already worth a certain amount of thousands of dollars, as of right now. And if he ever said, you know what, I'm done with this trucking thing. Let me sell all these trucks. It might not look like he had that money on him, but when he get rid of it, he gets 10 trucks, he got $1 million. You see what I'm saying? And so I don't know, nobody can't start over fresh with $1 million. So you have to think about that in your mind. I say reducing or deferring the potential tax impact on your estate, spouse, or family. This is what Emerald was talking about. Doing your business right and setting up the legal structure, because you don't want nobody coming back to your family if something happens to you. You know, reducing your taxes, all of these things. It's called that LLC, or even with partners. I said BB. Even with partnerships, sometimes you have a limited liability partnerships or LLPs. Say, hey, my family can't afford to take the same hit yours can. And that's when you know your value proposition, because sometimes you're selling your value proposition to your partner. Hey, for the Lewises, I build programs. So you might have some money, but you might be putting up $100,000, but you can't do what I do. So you got the money, but I don't have that type of money to take that type of hit if we take the hit. So you take that hit, and I'm gonna take the limited liability portion of it. Maybe you take a less hit, a less amount of the chunk of the partnership, but you're not worried about the liability. So this is some of the things you think about. So that's the way you can protect your family. Am I going too fast for anybody? Okay. Creating a strategic direction for your business growth. Again, if you know you're going to New York and you're in South Carolina where I am, there ain't so many ways you can go. So the destination is the number one thing, and then the destination will tell you the directions you can go. You know, if you only got $5 in your bank account, obviously you can't fly. You know, it's about the destination. When you know, okay, I want to end here at 55 and you 25. It's going to give you got a little bit of runway. But if you say that at 45, it's going to shut down a lot of things you can do. And so, but it'll tell you. You just got to know what your ultimate goal is. So we're going to get into the type of exit strategies, because a lot of people get the misconception of, oh, this is when I sell my business. No, it's not always selling your business. Sometimes different things can happen with your business. So of course, we talk about selling the business, selling the assets of the business. You know, merging the business with another business, sell shares in the business to the public at large. These are some of the ways that you can get rid of your business or end it in another way. So look at what we talk about with the mergers. This, advantages of a merger. The owner may receive cash or stock. Resources of both companies are combined, and some management may remain constant. Some of the disadvantages, some of the people work for companies like this, and y'all saw this happening. New owners or managers may have different philosophies or ways of doing business. Existing staff have less control. Sometimes they just get rid of you all, start fresh. This is when acquisition by another company. So owner receives cash again for sale, and management contract is negotiable for owners to stay or during the transition, or the fit is not always appropriate for the business and employees and the corporate identity, and the brand may diminish. So they just get rid of everything and start fresh. Then of course you sell your company, and that's what people get to. But this is the fun part though. If you can build your business to sell, it'll get addictive. You probably want to do another one and another one and another one.
Serial entrepreneur.
I'll
tell you some of the things, what this ties in with what Eve was doing. She was telling me about the bookkeeping. So in order to get these right here, all those bookkeeping, your cash flow statements, all of them have to play a key role in this. In the evaluation of your business. Definitely,
because your investors are going to look at that.
Yep.
Banks are going to look at that. They're going to say, again, how can I make money off of this? Not because you made a bunch of money off of it. It don't matter. I can say, hey, I made $200,000 as a photographer. So what? That's your picture. That's not mine. How is that going to help me? So, that business is going to say, hey, well, I worked this contract for 2 years, but I got 3 more years on the contract. And each year is worth $100,000. So you got $300,000. So I'm asking you for $150,000. you know,
That's it.
that's how that creates that situation for you. And they're gonna want to see that. And they're gonna walk through. They want to see, okay, well, maybe I can cut 2 people, that'll save me some money. Before you know it, I can make 200,000. I can do this, I can do that. You know what? I don't have to have a manager, I'll manage it. So I'm paying that person $70,000 and I'll keep it myself. Those type of things, but you gotta have that paperwork so they can see it clear as day. So another one, you got my franchising of the company. Again, you're not getting rid of the company, this is growing it. McDonald's was just a one-man band, but one store. Now look, and then also McDonald's is not a burger company anymore. Anybody know the McDonald's story? McDonald's is primarily a real estate company. McDonald's own the best real estate in the world. They own the best street corners in the world, not just in America, but in the world. That was important to them that's how they pivoted. But they didn't get rid of McDonald's, they just changed it. And employee stock. Again, this is another thing companies do to boost morale. So again, the description: employees receive shares of stock of the company over time. Key advantages: key employees are rewarded for their contribution, receive incentives for staying with the company for a number of years, and sharing the profits of the company they've helped to grow. Then, of course, the disadvantage: owners can borrow funds to the plan as a loan to the company. Employees may lose their shares if they leave the company, and if the value of the company stock goes down, the employees and share the burden. So this is when the people that have been there for 10, 20, 30 years, they're buying into the company. But this is how you're growing. This is it's not a public offering, it's an employee stock option plan. But this is the next one, that public offering. I think we went past it, but yeah, scroll up. And everybody knows what an initial public offering is, so you want to take like Facebook did, and Pinterest and Zoom, which I hate that I missed out on, because I watched Zoom break at like $20-something. Now it's worth $400-something a share. So that sucks.
Right.
Again, they didn't get rid of the company per se, but they gave it to the people for a lump sum of money. So all of us can possibly do this, but you have to set up that type of company that's conducive for that. Every company is not conducive for an IPO. Every company is not conducive for giving company shares to the stock. Some companies just, I gotta give my employee money to pay their rent, next month. Some companies start out like that, but you have to think about the end, what you want your company to look like at the end. The end may be what you want to look like in 5 years, what you want it to look like in 10 years. That's what we talked about our new company. With the battery. So look, this is our new brochure for J. Helene Apparel and Promotion, right? Angelo, Angelo's getting a little closer.
Can you see that?
Yeah, they can see it. Open it up a little bit.
Okay. These some of the. This is my copy. I can't give it to you.
So our goal with this company is to rival companies like Quill, what's the other one? Uline, those type of companies. So if you're familiar with Quill and Uline, they are good companies that you work with there's distributors that you can go ahead and get these type of products from. Well, we're distributors now as well. So we want to also create a situation where you have company accounts. So businesses can have accounts with us and pay net 15, net 30, net 45, those type of situations going forward. And so now we're working on when do we want to get to the point, at what time we want to get to the point where we can accept net 30 payments from individuals. Right now, we're just accepting straight up payments. But we want to go, because we understand that businesses need cash flow. And so they got their supplies, and give them 30 days, they'll probably be able to work it out a little bit better. But we have to get ourselves to that point. But you have to know that going in. This is a brand new business for us. So we're already planning that to get to that point. So this is one of the illustrations that we want to show what you got. So the biggest question I have is, who has an idea of where they want to be in the next 2 years?
Did you say 2 weeks or 2 years?
Years, Jada.
Okay. I was like, what?
I wouldn't set you up like that.
You real something slim for 2 weeks.
I wouldn't line you up like that.
Retired from the base, retired from my government job.
Okay.
Yeah.
That's what I'm talking about.
I want to have the J. Elise brand definitely an official business in the next 2 years. I would really like to have the nonprofit too, but I'm not sure if that's possible yet. But yeah, I definitely at least want to have the J. Elise brand official and having clients.
Okay. Well, let me just tell you something. You can be official by just going to you in Maryland. So go up to Calvert Street.
Oh yeah, that's the goal for the end of this year. That will be done before this year's out.
Just go down there. I forgot what floor it is, but I've been there so many times. Just go ahead in there and handle that. Get that about $200, and then you official. So that's all.
We have a puppet.
That's all you need.
We have a puppet in class.
Anybody else that knows? Look at the puppet. Anybody else know where they're going to be, where they want to be in 2 years with their business? Okay, now we got homework. That's homework for y'all. That's the first question we're going to talk about on Tuesday, because that's extremely important. If you don't know your destination, I'm telling you, you don't know how to get to Florida. Anybody can tell you it's Florida. You fall up in the right part of Georgia, they'll say, okay, yeah, you're in Florida. You're like, okay. You have to know, where you want to go. We're working on a plan. We had a plan to for our 40th birthday year, and we're like this close to getting to it. And it's not even a business plan, but we actually want to leave Columbia for the summer every year. By the time we're 40. So we're setting up the businesses so that we can do them remotely. So it's not that it's a business scenario, but we want to be able to do business remotely. Because if anybody knows about Columbia, this town shuts down in the summertime. This is a college town. So everybody's taking vacations. All the government people waiting on their budgets to come through, so they're not spending no money with you. Everything is just done. All the colleges, there's 5 colleges in this one town. Everybody goes home. And so it's like, why be here at that point? Kids are out of school. So go someplace else, then come back in August when it's time to go back to school and everybody has their head on straight. So y'all pray for us because we're coming up on 40 real fast. And we're months away. So at the end of the day, it's looking like we can pull it off, but that was a plan of ours. And it's okay if you miss it. Like, okay, we got to take another couple of months so you do it the next year, but at least you had a plan, because some things happen. We didn't plan for COVID, so that if COVID pushes you back a year, people will understand that. Literally, you should understand that. Forget what you should understand. People get ill, things happen, but as long as you have something to go on and you can jump back on it. Again, I had 3 goals for the end of this year. I pretty much met my goals, even though COVID happened, but I'm glad I had them written down because about June, I went back and looked at it and said, I think I can still make it, Em. And then we literally locked in and started trying to hit these goals. So it's good to know where you want to go. I started doing it yearly with my personal goals, and then my business is 5 years. So my 5-year plan will be up in 2023. And then before that, I already have the next 5 years set up. So this is what I try to tell individuals to do it. I didn't have a plan in the beginning. I would just do whatever to try to pay the bills. But you know, once you get a chance to do it, you know, and they say you're only responsible for what you know. I didn't know. So more knowledge I got, I'm more responsible to use it. Or I'm required to use it.
Well, I was gonna say, Jake, you did yours already 5 years?
Yeah.
Okay, so you are looked at what the end looked like.
Yeah.
So then you start doing 5 increments, and that's a good model to use. Some people just try to go back and start doing backwards planning. He did a 5-year increment. So if you go back and say, okay, 30 years, here's where I want to be at. I want to be having sales at a certain, you know, amount per year. I want to have this many employees going on and have this many contracts, whatever that looks like, and then start backwards planning out. It's okay, what does stability, what does, in terms of being stable, looks like for your company? Then go back and start looking at the income in years. How do I get there? So he did his, you know, going forward way, but you can also do it from a backwards planning way. Visualize yourself already being there, and then back up, say, hey, how do I get there? And then start writing down in phases, phase 1, phase 2, or year, you know, 5 year, 10 year, 15, and then start saying, go to a A/B scenario. Now what I need to do, this is my bigger hitter. Underneath there, here's my task list. I gotta do this, gotta do that, gotta do this, gotta do that. And then stick to it, see how well you're doing. Now, why is that important? That may be important because let's just say, Ms. Lewis, there's someone out there who learned about you. They come in and start talking about a merger, or how do we do business together? What is that possibility of us trying to maybe come together and grow a bigger company, right? Well, you got something on paper already that you can be able to start bargaining with. Here's my plan, my growth strategy plan. Here's how I'm going to get there. They don't have one. Now they're looking at you as the lead in here because you now demonstrate you have more value to talk about a plan of moving your company forward. If they don't have nothing, you just brought more leverage to the table. That makes sense. So I would
yeah, it makes a lot of sense. I mean, I see that in corporate America. The person that prepares their self-assessment better than the other one's gonna be the one that gets that promotion or not, or that raise. So definitely makes sense.
Now, Jay talked about, I think he talked about the SWOT analysis one time before.
Mm-hmm.
Now, all these things that he's talking about from day one, you got to keep them in mind, okay? Because they all tie in together. So as you start planning, that SWOT analysis, it matures, it changes, and once you grow from one level to the next level, you got to go back in there and start saying, hey, how do I put this back together? What does this mean to me now that I'm past this point? And what does growth look like to me? If growth is about the money only, then focus on that. If growth is about, you know, having employees, if that's your growth plan, then you got to just focus on what I need to do to get there, okay? Or I just want to be the one-man shop, and I want to be there. I'm satisfied with what I'm getting, and then when that retirement comes, I have no children, no grandchildren, whatever. Hey, I'm done. Time to go in the retirement phase and just enjoy life.
Joanna, you had something you want to say?
No, I'm grateful for everything that you guys are sharing. I think one of the big things that I keep thinking about now, so this has forced me to sit down and look at that bigger picture now and throughout this whole class, because I haven't had, it's kind of a small mindset not doing this preparation, right? Because you kind of, like I said, I feel like over time, I've boxed myself in by not having these plans, and I could have been a lot further along had I already sat down and thought this stuff through. And so I'm grateful to hear it now and get more of the details that I hadn't gotten in the past on how to apply it, so that this isn't just like I told your wife earlier, I shared with her that last month, you know, I was able to replace my income on my job, but I didn't have a plan to be able to continue that and have more clients that I have a relationship with that I could go ahead and say, okay, because one of my goals would be, of course, to be able to leave. I want to have more time for my son and more time as a family. You know, I know that running a business is a full-time job, but at least we can set the time frames about when we're going to do things and how we do things. And then if you can open up the door to have employees like Hanif is doing, you know, that's awesome to hear that he's done that in a 2-year time frame because he sat down and had that plan. So I'm really grateful, but I have a lot of thinking to do so that we can come up with the right like way to do things at this point.
That's a good comment.
That's a great comment. As you guys see, we're in the overtime segment, so if you guys if someone needs to go, by all means, I don't want to hold you, but if you want to stay, please stay. We're gonna stay on for a little while longer, take some questions, have this good conversation. But thank you guys so much again, and don't forget your homework. And that's 2 years, 2-year plan. We're gonna ask that. One thing I was gonna say. Okay.
Also, we talked about last class about meeting up to go over the business model canvas again in a little more detail. Especially for those who missed the class on last Thursday. I'm planning for Sunday, so I'll send out a meeting invite, and then if you are interested, just join us probably around 5 o'clock Eastern time on Sunday. So if you are leaving, just look out for that probably tomorrow, and then you can join us.
One more thing, think about the election. We're gonna send you guys something because I know on the East Coast time, I mean, it was Tuesday's election day. So we got to talk about that part. Like, are you guys, we're gonna probably do a little vote about who, coming in on election night. I know it's gonna be crazy, people in front of TV, and we try to be as brief as we possibly can be in class, but I am aware of that, and some people, I've already voted. I don't know how many people already voted.
I voted.
Okay, so if primarily most of the people voted, have a good one, Sean, voted, then we'll just go ahead on, and we won't do too much Trumpisms or Bidenisms. We can focus on business because they got their stuff already, and we're trying to get what they got, at least some portion of it. So that's good. So I just definitely wanted to put that out there. I was about to say, another thing, Joanna, is this talking to people that's in business. A lot of times we're starting our businesses alone. We're in silos or just in our household. And you see the difference when you get around people that's just talking about business all the time. It morphs. This is why these type of things are extremely important. It's that peer-to-peer learning and that peer-to-peer interaction is priceless. You get around other individuals, they motivate you, they help you out, everybody feels comfortable, and then next thing you know, you start to do more things. But as long as you're doing it just in your household, maybe this, maybe that, because y'all are one. And, when you hurt, he hurts, vice versa. So it's like, all right, you know what? I would rather sit in front of the couch and get this food that we just got and boo up with you instead of doing the work. But when you're talking to another couple on the other side of town that's rocking and rolling, you might be like, you know what? I'm gonna come with y'all and we're gonna rock and roll. And I'm telling you, it's a magic that comes with that. So being around other entrepreneurs, talking to other entrepreneurs, building off of other entrepreneurs, it's an amazing thing that happens once that happens. So that's something that you want to continue doing. You're starting out now, continue putting yourself in a position, even if it's virtually, to be around other entrepreneurs, because you're going to learn more and more, and it's going to take you to another level. Yeah, I'm looking forward. I got my class Monday morning, 7:30. I'll be there like religiously, and there's people from all over the world in this leadership class. But I'm there on Monday morning religiously because I need to get it. I got to get downloaded into me, So this is a real thing. I'm proud of you guys on participation. B, how you doing, man? Did you start already on your show? Okay.
All right, guys.
All right, Angelo's taking off. Thank you.
Yeah, man. See you in a bit.
Did you lock the gate?
Yeah.
Okay, we have to let you out. All right, so hey, Shaitan. I thought you had something to say. So Jana, no 2 years. We want you to get your business started next week. And then we'll come back and talk about it. We need your business started and legit before FastTrac is over. the goal is to make sure you're different coming out of here. You don't want to come out of here without your business. You know, it's in the doing. We can get all the information we want, but if we don't do it, knowledge is only power if you use it. You know, so we definitely had to do something about it. So Shaitan, when are we going to be able to see a difference in the housing market? When are they going to start kicking people out? Because I know they're going to start trying to kick people out at the after the election. You guys have a buyer's market, a seller's market in North Carolina?
I'm in Warner Robins, Georgia, but yes, it is.
I thought you were North Carolina. Do y'all have a seller's market there?
Yeah, it's still a seller's market. Still low inventory. I don't know. I was actually thinking about that today because I have someone wanting to look for foreclosures, and I'm like, the crazy thing is I have not even seen any foreclosures lately. So I believe they're holding those too right now. The banks haven't released them.
Yeah.
But also I know that they have people been whatever the mortgage program was, people probably been taking advantage of that, so they haven't been putting people out anyway. So I think it's gonna be real ugly.
Time of year, right?
Yeah.
Yeah. And so this is again knowing your market and knowing your business. I mean, it's gonna be ugly for some individuals, but see you, Jana. But it might be amazing for you because as a business owner and being in that space, housing prices are gonna drop. And you're going to be able to get people in the inventory, you're going to flood the market. And when somebody else is paying for it, is in pain, somebody else is in pleasure. So
it's true.
There's going to be some people sitting in there frustrated and losing their home. And then, you're going to be getting somebody in the home of their dreams.
Right.
That's for little or nothing.
Mm-hmm.
So I don't know how far is Warner Robins from Atlanta?
It's about an hour and 45 minutes south.
Oh, okay. Well, Hanif, she's still in Georgia. You can work on her when you want to do some real estate stuff. Make that connect.
Right. Absolutely.
You do commercial as well?
Uh-oh.
I don't think he heard himself.
No.
Oh my gosh.
Sounds like a plan.
Sounds like a plan. I got it.
Love it. But thank you guys. I know, look, it's coming up on, we ran a little behind, but if you guys have any more questions, I'll answer it. If not, I'll let you guys go. And, y'all can always reach out to us. Thank you so much for coming on, Shaitan. I know you always on, showing us your face, showing us a pretty smile. Thank you so much. And,
Jay.
What up, Jay? Hey, look.
Okay. I got you. I'm going back on mute. I got you.
No. You good. We was laughing at you because you were saying, sounds like a plan.
Yeah.
But we heard you loud and clear, though.
You know what? I do have hopefully a quick question. This was really good tonight. It wasn't something that I had really thought about, and I think it's maybe because I'm really the only one in my household and my family's like, you doing something else? I'm like, what, a serial entrepreneur, I guess. Always coming up with something else, So as far as like making it something that I could sell later, like I am working my broker's license, so I'm not talking about the real estate side. I'm talking about the like my consulting and coaching business. How do I, because I feel like I'm the one with the knowledge, with the experience, who's doing that part. So how do I, what are some things that I can be looking at now to make it so that it would even be worth something to somebody else to take on?
That's great. You get we got to get contracts. You got to get people that get businesses, that don't just consult individuals, consult businesses. So if you consult businesses and they're willing to sign year, 2 year, 3 year contracts, now it's worth something. Also get a staff after that, because yes, you're still there, but when you start to get those type of contracts, the day-to-day don't have to be you. You know, if somebody got to be there on a daily basis, it don't have to be you. As long as your company is represented, you're fine. You know, so you have someone there for admin that's going to be posted at this tech company, and they're taking notes, they're in meetings, they're doing this, they're doing that, you know, all those type of things. But you're coming in to do the home run hitting. You know, the young lady who's going to come speak, and I call her a young lady, she'll beat me up if I say it to her, but Carolyn Sawyer, she's going to be our speaker on the last day. She's a very successful consultant, and she's worked with the Department of Homeland Security, HUD, pretty much all the airports in South Carolina, Blue Cross Blue Shield, some everywhere. She's even been able to start a call center for one of their Palmetto GBA via her consulting company. And again, she'll stick her people there. She's moved people from DC to South Carolina. She's based out of Charleston now, but she's worked in DC. She got a space up there, got a what you call them, brownstone up there, set up an office, and she's doing work in there. She placing her people in those positions. So you just gotta change from people to companies, maybe even government organizations, but or bigger private sector companies, and they need coaching. They still need coaching. Look, Denzel Washington has an acting coach, so smart people invest in coaching. I have coaching once a week. I have business coaching once a week, because I'm trying to go someplace. It's somebody in a place that I'm not. You know, and if you want to get there, the great equalizer is the investment. A lot of times people just waiting on it to magically happen, or I'm going to meet somebody through Facebook and all that other stuff like that. Somebody knows what you know or what you need to know. They just might have a price tag on it. Now, if they're $5,000 a month and that's not your price range, pay the $500. Just make sure it's worth it. And I'm telling you, you'll leapfrog everybody else. But we in business, we think about trying to save our pennies. No, again, you can't want to make $100,000 a year and don't want to put up 10,000. You know, you're robbing the system. You know, you want 100 grand, but you're not willing to put in 10. If somebody told you you're going to get 100 grand, if you give up 10, you'll do it. But that's usually how the system works. So it might not be 10 up front, but if you do that over a month, that's $800 a month roughly. So if that's going into $200 for advertising, $500 for this, or $300 for that, then you've earned your way into a 6-figure scenario. But people didn't even want to spend $350 for a headshot session, you know, to get started. Well, if you on LinkedIn with no picture, you in trouble. You see what I'm saying?
You got to spend money to make money.
It's just those type of situations, you know. They'll tell you got a cell phone picture. They'll tell you, oh no, where's your professional headshot? It's just those things. We have to be willing to invest in ourselves. Those are the great equalizers. When I started taking pictures, I learned from some of the best photographers in the country. And I went to Atlanta and worked with, if you look up a lady named Lindsay Adler, she's young. She's about 34 years old. She's the best lighting photographer in this country. She gets $30,000 a shoot. That's her budget for working a magazine. Then women paid for pictures way more than men do. So I had to learn. I went to a woman named Sue Bryce. She's from New Zealand. If you look at her, she's like 60 years old. She like a supermodel. And she taught me how to pose women. And I had to go and pay her. You know, I was in a class learning how to pose women. You know, doing headshot. Peter Hurley, look him up. If you put in headshot, he'll pop up. It costs $3 grand to book him. for a headshot session. And he has 2 or 3 people underneath them, and the cheapest person is $1,000. So, but I went to, it's called the Headshot Intensive. He has a class. These are $1,500 classes. But he's the best. You know, so this is what you if I want to know what that looks like, and I didn't just learn how to shoot, he's telling me the business, because he's shooting Chris Matthews, some of the major actors and all this other stuff in New York and LA. He has an office in LA, office in New York. How do you get to these people? Well, he talks about that. So it's not just how to take a picture, but how do you get to shoot these people that's gonna pay $3,000? Well, this is what I did with my portfolio, and this is how I did this, and you know, and now you got a leg up. So that's the difference. So that's one of the great equalizers that I've learned over the time. Like, get around different people that's doing business. When it's time to invest. You know, again, at your level, if you only can afford $200, do it. Just spend it. If you're not spending no money on your business, something's wrong. That's probably the reason why it's not growing. And you being in real estate, you know they come to you with everything. You know, but you know people that's got drones, they doing drone stuff. You know, we just literally did something for did shots for a realtor. And again, it's all about requests now, because I don't even advertise my photography. You probably won't even see it the most part on my social media anymore. I don't even advertise. I'm too busy doing other stuff. So it's always usually about referral now. But he's in Orangeburg, South Carolina, and I have somebody I shot years ago, but we did a magazine shoot with a realtor, and now he's under him. He's like, go to him. So it was no question about price. He paid the price. He did everything, and he's happy with the work. So that's, you know, it came from that. But you got to invest. But I would tell you again, reiterate, just go to get the business clients. So you might have to invest in putting yourself in a position to look better for business clients, make your business look more appealing to those clients. I did that. I put my first office in the heart of Columbia, South Carolina, right on Gervais Street, like literally a stone's throw from the State House. So I looked like I was supposed to be there. Now, it wasn't that big, you know, it was like almost half the size of the room we're in now. And this is just one of my conference rooms. But I was there, and they were comfortable. They walked Angelo in his office. He was in the city. They came down there in the line to take their headshots for their whole office. So, hey, if I was over here, they probably wouldn't have came. Why? They don't even deal with people outside in the county. But they say, are you in the city limits? Yes, I am. Well, I'm right here. Okay, we can do business with you. I knew that. So, you know, I had to pay to be in that place. That's a premium spot. You know, for that little bit of space, I'm paying money for this little matchbox that my wife forced me out of because she said I was being too cheap after about 3 years. I was about to sign a lease again. And she said, no, you won't. But that's how that works. You know, so just make that investment and put yourself in a position where you're attracted to those people. They're starting to have virtual events now. So go to these virtual events, pay for it, and start pitching your business to these major companies or these these government agencies. Get certified through your state as a woman in minority-owned business, so you can start talking to them.
Does your wife work with people on that as well? Okay.
She's done all my certifications and a whole bunch of other people's certifications. Angelo does a lot of the finances, but whenever, like, far as helping people get business loans and stuff like that, get your business plan together. But when it's time for the money part, he calls Emerald. All right, we got to make sure her books is in order so we can get this loan. And so, want to get the DOT certifications and those type of things. So with your company, Joanna, look, you the 51% owner. Tell him he gotta take the 49. You the boss anyway, and you know he gotta ride. He gotta wear that. But now you're double minority, you know.
Right.
And so that gets you into that. I think the DOT got what 15%. They had like a 15% quota that they got to make every year. They got to give minority business owners. 15% of DOT budget is millions of dollars that they got to give to minority businesses. They get about 300-400 million a year. Yeah. Yeah, so if you get certified with DOT, you pretty much can do business with anybody in the government, but some of them are easier. So you can go to your city, go to your county. Well, usually it's your county, the state, and then, you know, DOT, depending upon what's happening. But I would do DOT, the state. I don't know how Georgia works, but I can find out. But Hanif has a young lady that was helping him with some, like, well, that's kind of pointing him in the direction for truckers. But you got to find out how the state works for Georgia. Emerald knows how to do everything in South Carolina.
Thank you. That was good. Appreciate it.
Did I answer your question though?
Absolutely. Yeah, you did. Yeah, thank you.
You can do it. And you talk, you know, Carolyn, Carolyn, when she comes on, you know, on the Q&A, definitely ask her because she's a big time consultant. She was on the news for years. She was a news anchor for years, and she went out to business. She's a FastTrac graduate. When she went out on her own, she went to FastTrac Growth Venture, which I took. This is the beginner's FastTrac, but there's another one when you've been in business for like 5 years, you take that one, and it's a growth venture. You know, we took growth venture because that's all Columbia offered at the time. So there was only 2 people that offered it in Columbia before I came on. It was Columbia College, which was all girls, and then Midlands Tech, which Tom was actually the one who taught me. He taught Carolyn as well. Tom, who came on. You'll meet Tom again. I don't think he was on the first time that Tom came on, but he's coming back on in a couple weeks. But yeah, so Kaufman has added more classes because they knew there's more people beginning than more people being in other spaces. But she's a FastTrac graduate, but she's done millions of dollars of business. And she, I know she's working closely with a lot of politicians, a lot of the airports, and doing a whole bunch of stuff. But that's her company. She runs a consultant firm called the Tom Sawyer Company. Yeah. So you can ask her some questions. She's very good, and she knows how to work that system, that minority. She get your 8A certification through SBA, all that good stuff. I worked for her when I first got out of college as her driver.
Wow.
Literally, I drove for her. I call her a tornado. She would come into town about once or twice a week, and she'd tear up the town and run right out. She's from here, but she said, I go where the money is. So she had contracts all over the country. And so she come here to sleep, but wherever the money is where she's gonna be. So she's an amazing woman. So you guys gonna love her. But hey, I come from her school. Driving her, I learned so much from her. You know, she talked about I had a Cadillac. So what you doing? You too young to have this type of car. So, but she's a sweetheart, you know, but she's tough. She's tough on her business, and she's very, very solid. She said she would come and support me. She's so proud of me. So she said she'll come and speak to my class. She said, I'm so proud of you. So yeah, get all the knowledge from her because I got a lot of mine from her.
Looking forward to it.
I'm gonna let you ladies go.
Thank you.
Thank you for the participation. And again, hit me up if you need me. I already know Joanna know how to get me. The time we connected, all you gotta do is just hit me up. You know, this is a 24/7 for me because I gotta talk to people in business and family members, stop them from jumping off the ledge.
Thank you.
Y'all have a good one.
You too. Good night.
Good night.